Welcome to DMEXCO 2019 in Cologne. Sir Martin Sorrell, I think we don't need to introduce you because you're
don't bother.
probably quite well known. So the first question I have to ask, being here in Germany, in Cologne, with S4, I think you're missing an acquisition in Germany. Are you here to scout targets?
We're not missing an acquisition. We have nothing in Germany.
not one yet.
All the German work we do from outside Germany, mainly Amsterdam or Paris or London. So we have a strong Western European presence, about 25% of our revenues, about 67% in the Americas, about 25% Western Europe, and the balance, the 10% is Asia Pacific. So we're spread, but Germany is a target, Spain is a target too, and then South Korea. Those are the three markets. We're in 22 markets now. We're in France, we're in Italy, we're in the UK, we're in Ukraine, Kazakhstan, would you believe? And Russia. I think we don't have to be in 113 countries like we were at WPP, but I think about 25 is the right level for us at the moment.
Great. When you go and look at a market like Germany, obviously you have the geographic target, but also a programmatic target, something you're looking for to
purely digital and digital content. And programmatic. So the agencies that you started, Nils, would have been you've sold it. You've sold them already. The purely they tend to be the smaller agencies. When I was at WPP, an agency like Conrad Kane's agency would be an example. So there are some very good agencies in Germany. But interestingly, there's not a lot of purely digital agencies here in Germany. As we were discussing on the main stage with Kai, the German market has probably moved to digital or to the internet a bit more slowly and a bit more traditionally. Maybe the entrenched legacy forces are stronger in Germany. You certainly see it in the publishing industry, and the what I call the King Canute, trying to push back the waves. Which is futile, is probably a little bit more prevalent here and maybe some of the other Western European economies than going with the flow. Other countries have gone with the flow. The UK actually, has embraced the internet probably much more rapidly than many other countries. So I think it's a little bit conservative here. And of course, when you're conservative, it's sort of the water builds up behind the dam. And of course, when it does happen, it will happen. Can happen much more violently.
Well, I have a theory, and I like to challenge them with you a little bit. I think that if we are moving towards a recession right now, I think a lot of what you're describing, why German companies have been hesitant to move towards digitalization, is basically because they're doing so well. They're still making a significant return on their capital, so they're saying, well, digitalization, it's tough, it's expensive, it's hard, it's not fun, let's not do it. My assumption is if a recession happens, there is no other way. Then you're going to have to, the dam is broken and you're going to have to go with it.
I think you're absolutely right. We did our earnings call yesterday, and one of the questions we got, how has Brexit and the uncertainty affected our business? Now, the answer is we've seen an acceleration. The first quarter, we were up 35% top line. Second quarter, about 46%. And in July, we were up 60%. So off a small base, it's true, but still very significant growth, about 2 to 3 times the market. Why is that? I think it's exactly what you said. It's when you have significant uncertainty and there's a damper on activity, your resistance to change, it's counterintuitive, but the dam breaks. And what you start to do is you say, okay, well, I've got issues to deal with, so let me deal with them now when times are tough and get them out of the way. So I think digital transformation accelerates with a recession or with a dampening of growth.
So at least a lot of the exhibitors here are going to have something to look forward to with the recession because the digitalization
if you listen to Roger McNamee on the session this morning with Ed Roussel from the Wall Street Journal, you'd want to cut your throat. I mean, he said most of the people who are here won't be here in 4 or 5 years' time. Now, to some extent, I'm in agreement with that. I mean, the traditional agency model is under attack. The traditional agency model will not survive. And my view is the big holding companies will be dismembered. I think that will be across the board. Industries go through consolidation phases and deconsolidation phases. And I think, you started to see it at WPP with the sale of Kantar, and they've disposed of a number of other assets. To be very aggressive about it, I think that's lazy management. I mean, I think part of what drives it is there are problems in dealing with these companies, and instead of getting off their backsides and trying to deal with it, the easiest thing is to sell and get rid of the problem rather than wrestle with it. Because we know, you have 24 businesses, you know that the reason that a business is not doing well is usually because the leader of that business is not the right person. And if you change it's usually not the business that's a problem, it's the people who are running it. So making that change is probably more important than shutting up shop and getting rid of it. But putting that to one side, I think the traditional agency businesses will be increasingly under pressure for the reasons you just mentioned, and the pressure will manifest itself in breakup. The breakup value of WPP is probably, the stock trades at about £10, and the breakup value, according to one analyst, is about 14.5. So there's almost a 50% premium there for breakup. If you bought the company, you'd probably have to pay a 20% premium. It's the traditional 20 to 30%. So there is some mileage there in terms of breakup.
But to challenge that a little bit, I think for a shareholder,
how
the
dare
breakup,
you challenge it?
I will challenge it a little bit because I understand the argument you made for the shareholder to break up the company. But isn't it true, if you think from a client side, that in digital transformation it gets more complex, it gets more complicated, so people are looking for easy answers, one-stop providers?
Well, I think it's a really interesting question, because what we've seen literally in the last, I would say, 6 months, the waves, what they called media palooza, and those waves of reviews that took place about 4 or 5 years ago, and then there was a second wave. We were discussing it. Pete Kim, who's with me here from Mighty Hive, and I were discussing it on our earnings call, and he made the point. You saw those waves, and then this third wave that we've started to see. I mean, we've seen there's a little bit of activity going on at the moment. We have been included in many of those reviews, much to our surprise, and these are big reviews, not because we can do the whole job, but because the digital parts of the jobs, and these are content reviews and media reviews, not just media only, the digital parts of the reviews require increasingly specialist knowledge and specialist activity. So what clients, I think, after 2008, there was the Lehman catastrophe, and the proverbial hit the fan, and clients started to cut costs violently. Then in 2016, we saw the walls in the walled gardens start to grow even higher, and the direct-to-consumer relationship come under threat from the platforms because of brand safety. Well, they said because of brand safety, interference in elections, and privacy. And that made the clients start to think about, well, have we reduced the amount of resources we have too much? And to use a Brexit simile, take back control. That phrase, take back, what is happening now, I think, is clients are taking back control. You can only explain the wave of in-housing, and it is a very significant factor. In one of our slides yesterday, Pete Kim's slide was 65% of marketeers are engaged in in-house activity on programmatic or on content, and the other 35%, in our view, are thinking about it. Now, the reason is they've got their houses in order since 2008, more and more. They've started to make investments now more. The world is a slow growth world, no inflation, no pricing power, so focus on cost. So it's a difficult environment. So they're starting to see in the digital environment, with digital transformation, what are the things they can do in terms of 24/7, always on content. So, and also in programmatic, what can they do to create content that is more effective in an always on world, and programmatic? What can they do? And having control of it internally is becoming increasingly important. relying on an outsourced agency which is geographically located elsewhere and may have other priorities is not sufficient. In an always-on world, I think about it rather like an election campaign. So if you're a
dangerous topic at the moment.
Yeah, if you're a Democrat candidate, the 22 candidates, whatever it is, you send out a message. You've got 21 other candidates sending out messages about you as well. So you have to react in real time. So it's really increasingly about brain and not brawn. So the holding companies that have a lot of brawn, particularly in the media area, they have clout. When you're buying media in a nanosecond, that's relatively unimportant.
And how does that tie in with S4? Because if WPP is a target for a breakup, if people are in-housing, why aren't you buying real estate, but instead of that, building a new group of digital service providers?
Well, we have 4 fundamental principles. Firstly, purely digital. I think very simply, I look at the market, 500 billion. The digital part of the market's growing at 20%. The traditional part of the market, which is about half of the 500 billion, is down, flat or down. The overall bit is growing at about 4 or 5%. So if almost half of it's growing at 20, the other half of it must be having a very hard time if it's only growing at about 5%. Sure. Okay? Yeah. So that's one thing. So push on an open door, go where the growth is. That's number one. Number 2 is that holy trinity model of first-party data driving content and programmatic in a continuous loop. The third principle is faster, better, cheaper. Faster means more agile. Better means knowing the technology. And cheaper means more efficiency. And the last thing is your unitary model. I'm not interested in earnouts. I'm not interested in people who want to sell their business. I want people who will buy into our vision, which I just described, and are willing, they'll take money off the table. You're an entrepreneur, so you understand this. So you mitigate your risk. Media Monks, Mighty Hive, sold effectively half of their equity for cash. The other half, they've rolled into S4 Capital stock. So far, we've gone from a market cap of £2 million last year to 500 million, or $600 million. So we've started well, where we have to maintain the momentum. But what I'm interested in is not what people want to sell out. I want people to buy in, or putting it another way, sell into the concept and help us build a business that we think is fit for the future and fit for format, not a legacy business which has been outdistanced by the digital changes.
So when you go and buy a company, that would imply that most of your due diligence is actually done on the entrepreneurs, on the people who run the business well and efficiently, because you also...
I mean, a lot of the criteria that you establish are, 101 really. I mean, they're apple pie and motherhood. I mean, it's the quality of the people. And how do you know about the quality of the people? Well, you form a judgment, like you form a judgment about me, I form a judgment about you in a series of conversations. That's one thing. You get other people's opinions, clients, platforms. I mean, we have used the platforms to establish what's happening within an industry from a sales point of view, from a profitability point of view, and from a technological point of view. And I'm not an engineer. I don't know what your background is. I don't know whether you're an engineer or not.
Business.
Right. So
nothing.
So my knowledge of technology and shifts. I mean, I may pass up on the Beatles every day because my understanding of technology is extremely limited. So I want to be technologically agnostic, because also we're serving clients and we want to be in a position where we recommend the best platform or the best software, irrespective of that. I mean, the ecosystem, again, in which we operate are the big 5, Google, Facebook, Amazon, Tencent, Alibaba, Apple, Microsoft. Apple crossed $1 trillion again yesterday, last night. And then the 3 software companies, Adobe, Salesforce, and Oracle. And you could throw in SAP and IBM and Baidu and ByteDance. That would be the ecosystem in which we operate. But we have to be agnostic about them. We can't be biased one way or the other. So that's important. So the criteria for you called it acquisition, in our case we're calling it merger because people are buying into the concept, is philosophical, cultural, an evaluation of people, not just from my view or my colleagues' view, but outsiders' view. It could be analysts, it could be trade press, it could be national press, it could be government, it could be any of the stakeholders that we deal with, suppliers, clients, whatever.
And maybe one last question. I watched an interview about half a year ago you gave on Sky News, and you said that in comparison to WPP, building S4 feels like you're on a speedboat. Now that you've grown for half a year, is it still a speedboat? Is that still what motivates you?
We said we were a peanut to start off with, and we said we morphed into a coconut, and then there's a double-barreled coconut called Coco de Mer, so that's where we are at the moment. I don't know what comes next.
You're going for pumpkin.
Well, it could be a pumpkin, it could be a watermelon. I don't know whether that's the right analogy or not, but I said yesterday we were a blip, so I don't know what a super blip is, but no, it still feels very agile. It's 1,500 people, 1,550 people. It is 22 countries now. I don't think we'll go beyond 25 countries in the short term at least. Numbers of people, I think in very short order, will be at about 2,000, 2,250, and I'd like to get the market cap to about $1 billion, so north of where it is now, to unicorn status. That's what I'd like to achieve. And then I think I'd like to, and I said this last year, I'd like to pause and see what happens to the traditional players, because I think the forces are so strong, the economic forces are so strong, and I think after the American election in November of 2020, the world economy, I think principally because of the clash between America and China, solving the trade problem is, in my view, the superficial issue. That will get done because President Trump wants to get re-elected. He will get re-elected, in my view, and one of the key factors will be coming to some sort of rapprochement with the Chinese over trade. But the fundamental issue is how do two top dogs live together? And America, and I'm a keen observer of America, I'm not sure that America is prepared to accept yet coexistence with a strong China. And you're not going to stop China. The horse is out of the barn. This struggle over IP, 10 years ago, you would have got some traction. Yeah. Today, forget it. The only area in which they're behind is semiconductor technology, and the banning, the sanctions around Huawei have accelerated the process. All the pressure being applied to China is just going to make China more focused on development. And when I was at Burning Man, actually, I talked to Grover Norquist, who goes to Burning Man, sort of unusually for a Republican, goes to Burning Man every year. And he said a very interesting thing. He said Republicans have a view that because of the aging of China, there is a strong view a view in the Republican Party that China's growth will peak around 2030 because the older sections of the population, the over 60s or over 50s, will be greater than the equivalent of millennials or Gen X or Gen Z. So the aging of the population, just like we've seen in Japan, will be the nemesis of the Chinese economy. I don't share that view. I think China, there are 1.3, 1.4 billion of them. There are 300 million Americans. On the basis that the Chinese are averagely intelligent, they win. So
it's a pure numbers game, and I already from the introduction I saw you're quite quantitative and oriented. Well, thank you very much for the discussion. So maybe it's not Germany but China for the next acquisition.
Well, we've got a small business in China. We're very keen. I think there's a big opportunity in China through transparency, and India. So China and India are big targets for us. Asia is only 10% of our business, but it's growing very rapidly, but from a small base. But I think transparent models, as we've seen in the West, in the US and Western Europe, are becoming more and more appropriate. And a number of the reviews that we're in, transparency is a key issue. So
Well,
Thanks
thank you
very
very much for coming to Germany.
Good.
Thank you for the
Very
chat.
good.
Appreciate
Very
it.
good. Thank you.